Hey there, I'm Lisa Doyle with the Doyle team here at our Christie's International Real Estate here in our East Bay. Welcome to our monthly market update. And this market update is going to be a little longer than normal. I'm going to do a full update on the first 6 months of the year. Here we are almost at the halfway mark, which is crazy. But I want to give you guys an update on the market, where we are in the East Bay, kind of where we're projected to see things headed, what's going on with interest rates and buyer demand and all the good things. So I'm going to jump right into a couple of slides, and then I'm going to share with you some East Bay data. If you look at this first slide, it says mortgage rates have been rising. We all knew that, right? And that has led us to trim our home sale outlook for the year, right? Interest rates have been a little bit volatile. The start of this year, rates were threatening to fall, and the market kind of responded positively. That's happened the last couple of years. But if you look at the rest of the slide, it says even with more modest pace of sales growth, home prices continue to steadily increase due to minimal inventory, right? We still don't have a lot of houses for sale. We have a very normal amount of inventory, and the demand just a little bit softer due to interest rates. So the rise in pricing has slowed, but we're still in a healthy, and I'll show you some data, pretty normal market here in our East Bay. And the next slide, I want to show you guys a couple slides, and then I'm going to give you some data. So it shows here home price growth is moderating. So obviously we knew that. If you look back at 2022, which I have to say, I've been in real estate for 40 years, 2021, 2022 were the hottest markets in the history of our country. As long as we have data, that window was the hottest time. And it was because interest rates were so incredibly low. People could work from home. They could live farther away from where they work. And they were flooding into basically our East Bay, but it happened in suburbs all over the country. Demand increased, right? But if you look at this growth, this one slide, growth is just moderating. But we've been in a healthy space. So I want to share with you guys just some local data, and then I'm going to give you some statistics on kind of where we're anticipating where we might head, because that is the number one question. All of our clients have been asking, what's going on with the market and where are we going? So right now here in our East Bay, we've got on the market in our East Bay, which is Livermore, all the way down the 580, all the way down the 680, down to Moraga, Orinda, Lafayette, all the way to Clayton, right? It's a pretty broad area. 1,682 active listings. 663 are currently pending in that area. So those numbers are pretty normal. Compare that to the hottest time ever, 2022. There was 1,200 pending and only about 550 active. So it's been kind of a total reverse. We could feel that, right? The market's become more buyer friendly, a lot more normal, but it's still at a normal, like steady pace as far as even, right? And I'm going to show you some data on that. So right now here in our area, I'm going to give you guys some of the local area statistics, and then we're going to talk about where we're headed. So right now in Danville, there's 166 active, 46 pending. San Ramon, 180 active, 48 pending. Super normal. 170 active, 53 pending. And then Pleasanton, 129 and 44 pending. And of course, if you guys have questions about other cities in our East Bay or your particular market, let me know. But what this tells us is the market has, of course, stabilized. But statistically, the economists will say if the inventory was sold in a 4-month window, so the current active inventory, which is 1,682, if that inventory, if there was no other homes that were placed on the market, would be sold in a 4 to 5 month window, that's considered normal. So right now, 663 pending in the last 30 days. What that tells us is we're in about a 90-day market, a little bit less than that, 2.5 months or so, where it would take about 2 to 3 months to eat up all of the inventory, which is a totally normal market, right? Everyone wants to know where we're headed, which I'm going to share that with you in just a second. But I do want to give you one interesting data point. Everyone says, where's the hot spot? The high end right now, this year and last year, has continued to be the hottest in our market. So of the 3 million plus home sales, there's been 180 so far this year. And during the same window of time in 2025, there was a little bit more, about 196. So the high end is less influenced by interest rate fluctuations, right? They're less concerned with where the interest rates are. Typically, they generally have a bigger, a larger span of equity. So that market's been the hottest. The market that's been, I would say the more struggling market has been the softer, the lower end, which more people influenced by rates. That makes sense. But what I would tell you is before the war, and we're starting to see that settle down. Hopefully we'll get some resolutions for that moving forward for the second half of the year. But before the war, rates were starting to work their way down, right? Affordability was becoming more possible. Right before COVID, interest rates were below 5%, a hair below in the upper fours. Right now, we're about 6.5 or so, depending on your credit and your relationship with your bank. So we've seen a gap, right? My prediction, we're gonna fall at some point after things settle down a little bit, maybe over this next 12-month window. My prediction, we'll settle back to where we were right before COVID. That would be amazing for our market. Even 5.5 would be a tremendous plus. But let me show you a couple more slides. One of the reasons why our real estate market across the country has stayed stable and prices have remained level, part of it's because inventory's been on the lower side, right? Not as high as it was during other times of fluctuation. But part of the reason is because we don't have what you might say pressured home sellers. If you look at this slide, this is the amount of equity that Americans have in our homes right now across the country. 39.3% of Americans own their homes free and clear. So that's a tremendous increase from where we were back at the, under that 2010 market when the market was significantly softer. If you look at this too, it says 33.6% mortgage are less than half. So a huge amount of families, 39% plus the 33 own their homes with at least 50% equity or greater. So a significant equity position that most homeowners are in. So if the homeowner runs into any sort of challenges, they have leverage. They can sell their homes and they're not in that, what you might say, pressure sale, right? Which tends to lower values. We're in a good spot with Americans with our home equity. One more slide I want to show you, and then this is going to kind of lead us into the conversation of where are we headed. If you look at this, inventory has been rising for 4 straight years. Yes, that is one headline you'll see in the media. But if you look at this compared to where we were back in 2019, we're still lower than we were back then. So even though inventory has risen since the peak of the market in 21 and 22, we still have a lower inventory in our East Bay, significantly lower. And of course, data statistics of every market, inventory remains low. So here's my prediction. I think the rest of this year, we are likely to see, and hopefully we'll see some interest rate relief coming on the pike here over this next maybe 3 months. When the Fed meets next, hopefully they'll be starting to announce some intentions of dropping rates. We'll see. A lot of it depends on where it happens with the global, the global markets and the war and all the things getting settled down and kind of resolving. The stock market is record highs, almost 52,000. So we're making progress with job reports and the stock market. And, we're seeing some positive messaging. And hopefully buyers feel confident to watch things. Of course, interest rates make a big impact on their affordability. We are likely to see that coming down. And I think our real estate market here will remain, I don't think we're going to see the robust increases that we had originally thought this year, but I think it's going to stay stable. That would be my guess. If you guys have questions, I'm Lisa Doyle, so happy to be a resource. And I'll come to you with an update here sometime next month to let you know how the second half is unfolding. You guys take care, stay well, see you soon.